Hey, crypto enthusiasts! Welcome back to Cutting Edge Crypto, the show where we dig into the wildest, weirdest, and most wonderful stories in the world of crypto. I'm Damien, your guide on this journey, and today we've got a jam-packed episode full of burgers, banks, and Bitcoin bros trying to build a country. Yes, you heard that right. Grab your favorite snack, and let's dive in. Now, we've got some serious news from the world of traditional finance that could have a big impact on the crypto market. The Federal Reserve has announced a 50 basis points rate cut. But what does that mean? And why should crypto fans like us care? For those unfamiliar with the term basis points, allow me to break it down for you. In finance, 1 basis point equals 0.01%. So, when the Fed says they're cutting rates by 50 basis points, that means a 0.50% reduction in interest rates. Essentially, they're making it cheaper to borrow money, a move usually made to stimulate the economy when things are looking a little shaky. The idea is simple. Cheaper borrowing means more spending, which in turn should boost economic growth. But you might be asking, what does this have to do with crypto? Well, my friends, this is where it gets interesting. When interest rates go down, traditional investments like bonds, savings accounts, and even stocks start offering lower returns. Suddenly, these safe investments look a lot less attractive, which means investors start searching for better opportunities. And guess what's sitting there, looking all shiny and promising? Cryptocurrencies. With lower returns from traditional assets, investors often turn to higher risk, higher reward options like Bitcoin, Ethereum, and altcoins. Historically, periods of low interest rates have been great for risk assets, and the crypto market is no exception. So, don't be surprised if we see an influx of capital flowing into the crypto space as a result of this rate cut. Another big factor to consider is how a rate cut can weaken fiat currencies like the US dollar. When borrowing is cheaper, more money circulates in the economy, which can lead to inflation, or at least the fear of it. Now, why does this matter for crypto? Well, Bitcoin and other cryptocurrencies are often seen as hedges against inflation. If people start to worry about the value of their fiat money dropping, they may look for alternative stores of value. And as we've seen before, Bitcoin tends to shine when inflation fears rise. It's like the ultimate "I told you so" moment for crypto enthusiasts. Rate cuts mean increased liquidity in financial markets, meaning more capital is available because borrowing is cheaper and credit flows more freely. And you know what happens when there's more money sloshing around? Some of it inevitably flows into speculative assets, like, you guessed it, cryptocurrencies. We saw this happen during the early days of the COVID-19 pandemic, when central banks cut rates and injected liquidity into the market. The result? The crypto market boomed as investors flocked to digital assets. So don't be surprised if we see another wave of investment hitting the crypto world soon. When interest rates drop, the yield on traditional investments like bonds and savings accounts takes a hit. If bonds are offering next to nothing in returns, investors might start looking at crypto as a more attractive option. It's like when your favorite football team suddenly starts winning. Everyone jumps on the bandwagon. The potential returns from crypto could look far more enticing than what you'd get from traditional investments, making it the MVP in the eyes of risk-tolerant investors. And finally, let's not forget one of the biggest selling points for Bitcoin right now. It's seen as an inflation hedge. With the Federal Reserve cutting rates, there's often a concern about rising inflation, and people start to fear that the central bank is printing money by keeping interest rates low. Bitcoin's capped supply of 21 million coins makes it a deflationary asset, meaning it's designed to resist inflation by nature. So, if people start losing faith in fiat currency, they might flock to Bitcoin as a way to protect their wealth. And as history has shown us, when inflation fears rise, so does Bitcoin's appeal as a long-term store of value. So, what does a 50 basis points rate cut mean for the crypto market? In short, it could lead to more money flowing into crypto as investors seek better returns. Increased liquidity makes its way into digital assets, and Bitcoin becomes even more attractive as an inflation hedge. It's like the perfect storm of factors that could drive up demand and prices in the crypto market. Next up, we have some big news from the land of tea and crumpets. Barclays has entered the chat about the UK's potential digital pound. They've been busy sharing their thoughts on how this digital currency should work. And it's not just a bunch of banker jargon, it's actually pretty interesting. Barclays suggests that a digital pound should be designed to work in various sectors, from retail to wholesale. Sounds suspiciously like coins we talk about in the Discord. Little hint: XLM, XDC, and of course XRP. They're talking about things like smart contracts, programmable payments, and integrating this currency into everyday life. Imagine telling your granddad that he could set up his pension to automatically transfer funds each week using a digital wallet. Mind blown, right? But what's the catch? Well, Barclays is keen to highlight the importance of privacy and ensuring this digital currency doesn't turn into Big Brother watching every penny you spend. Because, let's be honest, no one wants the government tracking how much they're spending on late-night kebabs. Barclays is pushing for a framework that gives people security, control, and flexibility. Overall, this could be a huge step towards modernizing how we handle money here in the UK. Stay tuned, this digital pound might be closer than we think. Next up, let's take a trip to Singapore, where DBS Bank is cooking up something special for the crypto world. They've just launched crypto options and structured notes, which, let's be real, sounds like something straight out of a financial wizard's spellbook. In plain English, this means that DBS is giving investors more ways to gain exposure to crypto without directly holding the assets themselves. Imagine this. You're interested in crypto, but you're not quite ready to dive in and buy it outright. Well, now you can dip your toes in by investing in these new financial products instead. It's like ordering the sampler platter at a restaurant instead of committing to the full meal. And here's the kicker. DBS is one of the first traditional banks to offer such a comprehensive range of crypto-related financial products. This is a big sign that crypto isn't just a fad. It's becoming a permanent part of the financial landscape. It's like the finance world is finally saying, "Okay, Bitcoin, you can sit with us." How exciting is that? All right, let's move on to the big news from BNY Mellon, one of the oldest banks in the United States. They've just received the go-ahead from the SEC to offer institutional crypto custody services. In other words, they're now officially allowed to be the babysitter for some seriously rich people's crypto assets. Now, why is this a big deal? Well, up until now, one of the biggest barriers to institutional investment in crypto has been security. Banks and big investors want to make sure their assets are kept safe, just like you would with your gold or jewels. And BNY Mellon is stepping up to provide that safety net. This could open the floodgates for more big players to enter the crypto market, bringing a whole new level of legitimacy and, of course, a ton of cash. It's like the difference between keeping your money under your mattress versus putting it in a bank. And trust me, the mattress is starting to look a bit outdated. So, kudos to BNY Mellon for helping crypto take another step into the mainstream. Now, this next story is an absolute whopper, pun intended. Former President Donald Trump recently waltzed into Pubkey, a crypto-themed bar in NYC, and bought some burgers using Bitcoin. Yeah, you heard that right. The guy known for his golden towers is now paying in digital gold. I'll take a burger, make it well done, with a side of crypto. The best burger, believe me. Everyone's talking about it. It's huge. Jokes aside, this is actually a pretty significant moment. It's one thing for celebrities or influencers to endorse crypto, but when a former president is paying for his meal with Bitcoin, you know it's going mainstream. It's like when your parents finally got on Facebook. There's no going back now. As we know, Donald Trump is diving into the DeFi world. The former US president is making moves in decentralized finance with World Liberty Financial, and Ethereum's co-founder has some, let's just say, interesting thoughts about it. So, grab your popcorn. DeFi, or decentralized finance, is all about creating financial systems without the need for traditional banks or intermediaries. And now, Trump wants in on the action. But here's where things get interesting, and maybe a little bit scary. Charles Hoskinson, the co-founder of Ethereum, one of the most influential figures in the crypto world, recently shared his thoughts on Trump's DeFi plans. And let's just say, he's not exactly thrilled. In fact, he called it scary. But why is that? According to Hoskinson, his concern is that everything Trump does is non-transparent. And in the world of DeFi, transparency is key. It's what keeps the system decentralized, trustless, and accessible. If you start introducing opaque practices, you're basically turning DeFi into, well, TradFi, or traditional finance, which is what we're trying to move away from in the first place. The whole idea of DeFi is to give power back to the people, to create a financial system that's open, accessible, and verifiable. But Hoskinson fears that if Trump gets involved, it might just become another playground for the wealthy and powerful, with the same lack of transparency that we see in traditional banking. Now, let's be fair. There are always two sides to every coin, especially crypto coins. Could Trump's entry into DeFi actually be a good thing? Some might argue that having a high-profile figure like him could bring more mainstream attention to DeFi, which could lead to mass adoption. And let's be real. If there's one thing Trump knows how to do, it's attract attention. His involvement could potentially bring in a wave of new investors who are curious about DeFi and willing to give it a shot. And hey, more people in DeFi means more liquidity, more innovation, and more opportunities, right? But here's the flip side. If Trump's DeFi platform ends up being a centralized, opaque system masquerading as decentralized finance, it could do more harm than good. It might reinforce negative stereotypes about crypto being a Wild West and scare off the very people we want to attract. Plus, let's not forget, regulatory eyes are always watching, and Trump's involvement might just put DeFi under an even bigger microscope. So, what's the big takeaway here? Hoskinson's concerns highlight a fundamental question about the future of DeFi. Can it maintain its decentralized, transparent nature in the face of big players trying to enter the space? And will Ethereum, the backbone of DeFi, continue to be the platform of choice? Or will we start seeing a shift towards more centralized alternatives? It's a delicate balance. DeFi's strength lies in its ability to operate without middlemen, in a transparent, verifiable manner. If Trump's entry shifts that balance towards centralized control, we could be facing an identity crisis for the entire DeFi ecosystem, and that's something that has folks like Hoskinson genuinely concerned. So, should we be worried about Trump's DeFi platform? Well, that depends on how you view the future of decentralized finance. On one hand, his involvement could bring much-needed attention and investment to the space. On the other hand, it could threaten the very principles that make DeFi so revolutionary. Let me know in the comments what you think. Next up, Ripple is making waves again. Literally. Their partner SBI has just confirmed their participation in BIS's project Agora. Now, this might sound like a top-secret spy mission, but it's actually all about advancing cross-border payments. Project Agora is an initiative by the Bank for International Settlements to explore the potential of digital currencies in global financial systems. Ripple's involvement means that XRP could be playing a crucial role in speeding up and securing transactions between countries. In simpler terms, you might be able to send money to your mate in another country faster than it takes to boil a kettle. Exciting stuff, right? And speaking of Ripple, in a recent interview with You Today, Ripple's chief legal officer, Stuart Alderoty, shared that Ripple is more committed than ever to expanding its reach and solidifying its presence in the crypto world. And let's be real, when a company with this much influence says they're going all in, that means big things are coming. Ripple's been on a mission, winning legal battles and forming strategic partnerships that are setting them up for even bigger things. It's no secret that they've been fighting the good fight against the SEC, but now it looks like they're ready to step up their game in ways that could change the landscape of crypto payments as we know it. So, what does going all in mean for Ripple? It means they're not just satisfied with being a big player, they want to be the player. With plans for global expansion, new use cases, and a deeper dive into decentralized finance, or DeFi, Ripple is gearing up to lead the charge in blockchain innovation. and I, for one, am right behind them. Now for the not-so-glamorous side of crypto, lost wallets and hackers. The Independent recently reported on people who have misplaced their Bitcoin fortunes and others who've been hacked. Imagine having millions in your favorite crypto but losing access to it because you forgot your password. Nightmare fuel, right? And if that wasn't bad enough, hackers are out there trying to swipe your hard-earned crypto. But fear not. With proper security measures, like using hardware wallets and never sharing your private keys, you can keep your assets safe. Just treat your crypto like you would your pet. Don't let it wander off, and don't leave it unattended. And finally, the story we've all been waiting for. The Bitcoin bros want to crowdfund their own country. Yes, apparently they've decided that regular countries just aren't cutting it, and it's time for a new nation where crypto rules the land. They're calling it the Satoshi Nation, and they plan to build a utopia where crypto is king. Who knows, maybe one day we'll all be booking our holidays to this crypto paradise, paying for everything with our digital wallets. It's a bit of a crazy idea, but if anyone can make it happen, it's the crypto community. So, there you have it, folks. From the digital pound to Trump's Bitcoin burgers, we've covered a lot today. The crypto world is evolving faster than ever, and it's one wild ride. Don't forget to hit that like button, subscribe if you haven't already, and share this video with your crypto-curious friends. This is Damien, signing off from Cutting Edge Crypto. Keep it real, keep it crypto, and stay curious.